Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up our analysis on the gold market. So yesterday in the Forex report we have explained why we think that Fed stands in a really difficult situation. Actually they do not know what to do in the current circumstances. They have no long-term plan on stabilizing of the United States economy. And today in our fundamental report we continue this topic, but in relation to the gold market. So add some more moments in relation to the China situation and overall shipping business, how it behaves and why it is important for the gold market. Well, in two words speaking, currently I'm just briefly have run through the headlines in the news and Reuters and opinion on different analysis, even on the big banks as ING and Standard Chartered and some others. And mostly the analysis followed to the classical approach. So they suggest, actually it was a poll by the Reuters approximately for the 30 analysts, and all of them mostly tell that nearest time Fed gold should stay on the surface. It's just because rates are not too high by far. But later, in the next year maybe, gold should feel pressure and start dropping. So this classical approach that is based on belief that rising rate should push inflation down, while the economy should stay with some bullish, some moderately positive performance. Maybe it will be below the percent growth by the gross domestic product, maybe slightly above, and historically 1.4% maybe. And all this story should be over happily, and everything should go as it was before this moment. But in our fundamental report, we explain why, by our view, this time the situation will be different. And when they believe everything should stabilize, we think that will be the point of no return for the United States economy. And that should become the actually golden moment for the precious metals. This will be moments of the starting of the big rally. Actually, it should start even earlier, when the first signs of the collapse will become visible in the statistics, which I mean is the dropping of the PMI, dropping in consumption, gross domestic product, high inflation. So once we start seeing it together, this tells us that gold market reversal stands somewhere around the corner. So that topic and with some more details we discussed in today's weekly report. On the technical side, currently, despite on visible significant drop here on the daily chart, in fact, if you will take a look at the larger scale, you will see that retracement very small in the gold market. It just confirms our view that investors are not hurry up with leaving the gold market. They mostly keep their positions. Yes, some fluctuations exist. Currently, short-term sentiment stands bearish as speculators are closing the exposure to the gold market. But in general, I would say that market resists pretty nice, especially if we see that Fed policy is acknowledged, it is set, and it is supposed moving higher. But on the anticipation of that, gold market shows no significant drop. But that's about the long term. In the shorter term, we suggest that market should keep going lower. At least in the current circumstances, guys, if you will see from the report, this area stands as really very strong support, and we just do not see any reasons to take additional risk trying to jump in the market for the $50 above the market. So just the common sense suggests it's just much better to wait for another drop if it will happen and take the position at much better strategic level. with a significantly lower risk. So here, well, we could try to take part in some steps that we have discussed on Friday. Actually, it has worked really nice. I will show you a bit later. But the advantages of taking the strategic position around this area overcome the possible benefits of trying to jump slightly earlier. And that's why in the current circumstances, especially when the overall technical background stands bearish, we have the bearish trends, bearish performance, strong performance of the interest rates. All this stuff makes us think that it's much easier and better just to wait for this level. That's what about taking the long position. Although on a daily chart this time we have nothing special, so we haven't got any grabbers that we discussed. Yes, we have some consolidation, but actually no patterns. We have something to discuss on the lower time frame. First of all, recall our entry on the long side on Friday. We said you could use minor pattern, this head and shoulders, if you would like to take the long position on with the larger head and shoulders. So if you remember, here we also have the larger head and shoulders. And we have created the trading plan that led us to participate in this pattern, although overall background stands not really supportive to this scenario. But anyway, you could see that using the minor pattern brings really good results. As you can see, market hits the OP, then later it even has hit the XOP, right to resistance around 1893. But then it has dropped. And that performance makes us think that big pattern, big head and shoulders, stands really on the hazard of the possible failure. And here's why. Despite that we have here minor grabber, and I don't know whether it's work or not, on the high time frame, if we take a look at the full time frame chart, we have two bearish grabbers side by side. And take a look at the performance of the right arm. I already warned you about this big sell-off, which I said it's really big challenge for failure of this pattern. Because on right arm, bulls should control the market. But when you have the sell-off on the right arm, this is bad sign for the reversal pattern. Now, additionally, we have two grabbers side by side. And overall performance, which is absolutely, well, irrational for bullish reversal pattern. Here, you would like to see something thrusting action, so something of that sort, but in opposite direction. Because that's the moment where a bull should accelerate the performance. But here we do not see it. And this is really a bad sign, which means that chances on the failure of this pattern stand really significant. That's why for the bulls, we think that the most acceptable strategy is to wait for 1825, 1830 area. Why this level is important, again, you could find in the analysis in the weekly report. So for the bears, you could follow, you have actually a big choice, a few options. First of all, you could consider these grabbers. Second, you could use the breakout for this level. So once markets start breaking it down, it will be a clear sign that hand shoulders is failure and we're ready for a downward continuation. So you could additionally use the stop sell order around maybe 1870 area. So this is what we have currently on the gold market. So let's keep watching what will happen next week, guys. We will get the CPI report on Wednesday, and that might be also very important for the market.